Good evening and welcome to the Business Day. I'm Andrea Chisholm. Some member countries of the Caribbean Development Bank recorded 3% growth for 2021. The CDB released its GDP projections today at its annual news conference. As you'll hear from Javon Keys, the projection is for growth this year to triple last year's figure.
The Caribbean Development Bank (CDB) says its 19 borrowing member countries saw growth for 2021 despite the continued shocks associated with the COVID-19 pandemic.
CDB's borrowing member countries are estimated to have grown by 3%, with commodity exporting economies growing by 2.7% and service exporting economies expanding by 3.2%. Growth in service exporting economies reflected an almost 10% increase in tourist arrivals between January and September 2021 relative to the same period in 2020, much of which was recorded during the latter part of the period, as many Caribbean countries benefited from a recovery in international leisure travel.
The CDB's Director of Economics, Ian Durant, says the tourism sector's improvement was still well below pre-COVID-19 levels, coming in 65% below the 2019 benchmark year. However, the CDB expects things to continue improving, with growth for 2022 being projected at 9.1%.
The projected outturn is dominated by Guyana, which is expected to grow by 47.5% as output in the oil and gas sector continues to build momentum. Among the other commodity exporters, a resurgence in energy production is anticipated to alleviate supply-side constraints and lead to an increase in GDP in Trinidad and Tobago, while the gradual easing of restrictions to movement and increased capital expenditure are forecasted to cause a turnaround in economic performance in Suriname.
Meanwhile, President of the Caribbean Development Bank, Dr. Jean Leon, says growth is anchored on a number of factors.
With rising debt levels, limited fiscal space, and declining export receipts, our sustainable development trajectory will hinge significantly on how quickly we can address our legacy structural weaknesses, preserve macroeconomic stability, and build a more resilient ecosystem to cope with climate change.
Scotiabank Jamaica has pulled back on its decision to increase some of its fees. The bank delayed the fee hike for automated banking machine and point-of-sale transactions for 6 months. The new fees, which were slated to take effect today, would see customers paying $25 per withdrawal at Scotiabank machines and $60 for withdrawals at other banks' ABMs. Meanwhile, in a release late yesterday evening, Scotiabank said it will expand its payroll account to any customer with a monthly income of less than $100,000. This will be done whether the individual's salary is deposited to the account. This account type has no minimum balance requirement and attract no fees for Scotiabank ABMs or point-of-sales transactions. The bank will also increase promotions surrounding other types of accounts designed for customers who earn less than $100,000 per month and are enrolled on government assistance programs. The bank says senior citizens with Scotia accounts can use Scotia ABMs and point-of-sale machines for free. Banks and cambios are selling the U.S. currency for an average of $157.38. $127.96 is the going rate for the Canadian dollar and $210.88 for the pound sterling. The euro is again costing an average of $178.20. The JSE index declined by 2,606 points today, while the junior market index gained 89 points. Among the winners were PBS Solutions 9.75% shares, Community and Workers of Jamaica CCU, Everything Fresh, Fontana, and the Jamaica Public Service Company 9.5% shares. On the losing side were ISP Finance Services, SSL Venture Capital Jamaica, KLE Group, Elite Diagnostic, and Massey Holdings. And that's it for the Business Day. I'm Andrea Chisholm. Good evening.